You heard that right. The other day, Mario Draghi and the ECB decided to bring interest rates down further and continue with their QE program. So today we are learning that the Bank of Japan is responding to Mario Draghi and considering cutting negative interest rates further. This seems to be a trend now amongst central banks. We started this whole episode off, this most recent easing episode, with Donald Trump making a big stink over the fact that the United States had positive rates of interest and that we were being led by boneheads at the Federal Reserve because they weren't lowering interest rates. They weren't taking advantage of this historic opportunity where the whole world was cutting interest rates and the United States was really not doing the same. Trump was also urging to perhaps do some form of QE, and he was also saying that we should extend the maturities of the bonds. So Donald Trump, this was just, a lot has happened. This was just back a while back, a couple of days ago, earlier last week. And he said the Fed should get our interest rates down to 0 or less. And we should then start to refinance our debt. Interest costs could be brought way down. One of the biggest issues that people have with the debt, they say that the interest payments alone will crush the United States, will be unable to pay it, of all sorts of problems. Well, what they're considering now, though, is bringing rates down to 0. You've already got negative interest rates at the European Central Bank and the Bank of Japan, which means they don't have to worry about coming up with money every month to pay interest. That's a very important way of pretty much pushing your can down the road and not having to pay the debt. The other way is extend the maturities. Instead of issuing short-term paper so much, you start to offer longer-term bonds. I don't know who in the right mind would buy a bond where you get no interest for 50 years to 100 years. But that is exactly what the Treasury Secretary is saying. The other day, he came out first and said there should be a 50-year bond, seriously considering it in 2020. And then just a couple of days later, that was on CNBC, a couple of days later, he tells a Wall Street Journal reporter, and if that works, how about a 100-year bond? Wonderful. Now you try this at home. You've got a mortgage, perhaps, and let's say you also have a car loan, and maybe you have some student loan debt, maybe you got some credit card debt, maybe you even own a vacation home which is financed. And you hear all this and you say, what a great idea. Why don't I refinance my debt and say, why don't I not pay any interest on that debt and maybe get the credit card company to pay me a little money on a negative rate, and then extend the maturity of my mortgage, my student debt, my car loan, my credit card, my vacation home, put that out to 100 years so I never have to pay it. And if my kids are old enough, they're probably not going to have to pay it either. There you go, debt solved. Now, who is in a position where they can do this? And if you think about it, the borrower is generally the person who can call the shots, not the lender. The borrower is the one who says, I'm not gonna take your money out on those high rates. You're gonna have to pay me something. It's the lender that has to make the loan attractive. But when the United States is the one that's borrowing the money, I think I messed that up there. When you are the borrower, you need to make it attractive to the lender. Sorry about that. To make sure that you are providing the right terms. If you don't do that, then you can't get the terms you want. But the United States, the Bank of Japan, and the ECB, as borrowers, seem to be dictating the terms to the lenders. They seem to be saying, look, you don't need any interest. We can just let this go. And we're not going to pay you back in any interest, and we're not going to pay you the principal back for 30, 50, 100 years. This is a big problem, and I think the banks have finally realized, the Bank of Japan, the Federal Reserve, the United States Treasury, and the ECB, that they have dug themselves into this hole so deep, this negative rate, this buying asset issue, that they're in the situation, they find themselves in a hole, they have to keep digging. There's no way out of this. So Bank of Japan is talking about cutting negative interest rates further. Now, why do you think they think that? Well, it's interesting that the United States, Japan, and ECB seem to coordinate all of their moves, because when the United States, or the Fed, finished QE, very quickly Japan announced the next day they were starting their own QE program. Then just a few months later, Fed Vice Chair Stanley Fischer convinced Mario Draghi to start QE on their own. And their QE is now bigger than the United States ever was. And think of this statement that Mario Draghi made the other day. He comes out and he lowers interest rates. He announces more QE. And then he says, negative rates will not provoke the collapse of the financial system. Well, first of all, who asked that question? I think he realizes that is what's on everyone's mind. But he is saying, as the head of the European Central Bank, don't worry about it. Negative rates are not a problem. So Bank of Japan says, we're not worried about it. We can lower interest rates as well, even further into negative territory. Now, the Fed isn't saying that. The Fed has been reluctant to use the tool of negative rates. They're trying to keep a positive rate of interest so they have some advantage as a borrower over other countries, because the United States relies a lot on borrowing. So what they're saying is, well, we want to buy more assets. We bought a lot of assets during QE. Maybe we didn't buy enough. We learned how to do it. There wasn't really any problem doing it. We probably should have bought more. We learned how to drive drunk. We figured out how to do it. We can do more. And Draghi saying, well, we can do both. We can bring the rate into the negative territory. And then, of course, we can also buy the assets. But it is fiscal policy. He's saying now that fiscal policy is what's going to have to drive the economy. The negative rates can only do so much. But he's not worried. He says, we think that the probability of a recession in the euro area is small. But it has gone up. Of course, yes, it's gone up a bit. And it's not just the ECB, Japan, and the Fed talking about lowering interest rates and also buying assets. Mario Draghi is saying, and Trump is saying the same thing, that we need more, quote, fiscal policy. Now, what is fiscal policy? Fiscal policy is what this spending of the government does, not what the monetary policy of the central bank does. The central bank is in charge of monetary policy. They move interest rates one way or another, and they go out of their way to buy assets. But it's the taxing and spending policies of the government that also can boost or crush an economy. And Mario Draghi also said that there was unanimity that the fiscal policy should remain or become the main instrument. So all that they're doing, bringing rates down is into negative territory and buying billions of dollars worth of bonds. That shouldn't be the main focus. They need the governments to cut taxes, to do airdrops of money. I think he was saying that, helicopter money. He was saying, let's keep in mind all the time that giving money to people is a function of the fiscal policy, not the monetary policy. So Draghi's saying, hey, my hands are tied. I can do nothing. You guys, the fiscal policy needs to get in line. Now, Trump has been yelling and screaming at the Fed, calling them boneheads. We heard that. But he's also saying we need another tax cut. And Draghi is reporting the same way. And by the way, again, if I may repeat myself, because I love to hear myself talk, if fiscal policy, blah, 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 and if we get the helicopter money, then it must be the fiscal policy that does it, not the monetary policy, because the ECB can only do so much. We can only lower the interest rates into negative territory. We can only buy so much bonds. So, all right, that's what you have. Now, you got Bank of Japan saying, oh, well, that's great. If negative rates won't crash the financial system, let's have more of them. And the Federal Reserve is saying, look, all those asset purchases we did, they were just fine. We don't have to worry about that either. So they're all now saying negative rates will not provoke the collapse of the financial system. That's all you need to know. And so it looks like we are all destined, all these central banks, to go further into negative territory. Now, I find this curious. It's not related, but it is related. Check this out. This is Steve Mnuchin. Now, he's been babbling on about 50-year bonds, 100-year bonds. He's saying it's for the benefit of the bondholders, that they are going to benefit from having a different risk profile, because now they can get paid very little interest on even longer-term bonds, or eventually maybe no interest on longer-term bonds than they're currently getting. But listen to what he has to say here about cryptocurrencies. Like, this is like a big emergency. We've got all these problems with, everyone's worried about a lack of growth. Everyone's worried about the level of debt. And you can see how they're trying to solve the debt problem. You don't pay any interest, and then you don't pay the principal back for 100 years. The debt problem is solved for your life, my life, and your children's lives, and maybe even your grandchildren's lives. But listen to this, what he has to say about cryptocurrencies.
Establish the Financial Stability Oversight Council's Working Group on Digital Assets. This FSOC group enables U.S. financial regulators, such as FinCEN, the Fed, OCC, CFTC, CFPB, SEC, and other key stakeholders to work together to combat risks posed by cryptocurrencies. As the President has said, Bitcoin is highly volatile and based on thin air. We are concerned about the speculative nature of Bitcoin and will make sure that the U.S. financial system is protected from fraud.
Stop. Now, he's saying that Trump says that Bitcoin is based on thin air. Okay, many people say Bitcoin is based on thin air. Many people say it's a speculative asset, not a worry. If it is a worry, well, that's up for the SEC or some consumer protection agency to look after, to make sure that a bunch of knobs don't go out and take a second mortgage on their house and buy cryptocurrencies or Bitcoin. Okay, I understand that. We've heard that all along. That's not a problem. But what he's saying here is they've established a working group made up of some of the most powerful alphabet agencies in the United States, but not to protect these hapless knobs from buying Bitcoin or, God forbid, an altcoin, but rather to protect the entire financial system from fraud. They're committed to doing this. I'm not sure how Bitcoin, the way he describes it, if it's just speculative and based on thin air, has the potential to destroy the financial system or infect the financial system with fraud, because the fraud in Bitcoin happens on exchanges. Okay, I can see someone say we're going to clean up those exchanges, we're going to shut down the exchanges. He's saying something bigger. He's saying that somehow Bitcoin represents a threat, and he's couching it as it's some type of fraud, but he's not saying it's fraud on an individual, that somehow it's fraud on the financial system. I'd like to know what you guys think on those comments. I'll play them again, because it sounds to me like he's making a working group where they're insisting that something must be done to prevent this fraud. Listen again.
Establish the Financial Stability Oversight Council's Working Group on Digital Assets. This FSOC group enables U.S. financial regulators, such as FinCEN, the Fed, OCC, CFTC, CFPB, SEC, and other key stakeholders to work together to combat risks posed by cryptocurrencies. As the President has said, Bitcoin is highly volatile and based on thin air. We are concerned about the speculative nature of Bitcoin and will make sure that the U.S. financial system is protected from fraud.
I don't know what risks he's talking about, and maybe I only got a clip here and I can go back and listen to some more, but putting together a working group of the CFTC, the SEC, the CFPB, the OCC, the Fed, FinCEN, that's a pretty big group of, quote, heavy hitters, unquote, of the United States oversight regulatory bodies. And to have the Treasury do this as a working group, this is akin to, the working group on financial matters, which is basically the plunge protection team. These are not agencies that are necessarily brought together by one group, like the Treasury. They generally operate in their own silos. So, for example, the CFTC handles commodities. the SEC handles securities. They don't generally work together in a group on a single issue. And then you add in FinCEN, the Fed, OCC, CFPB, and then he's another key stakeholder. So it looks like, I think, that all the central banks are out there doing one thing, saying another. Mario Draghi bears repeating. He is taking the European Central Bank into negative territory further and doing more QE, and he's insisting negative rates will not provoke the collapse of the financial system. Okay, Bank of Japan, no problem. Federal Reserve saying, look, we bought a lot of assets. We bought $4 trillion worth of assets last time in QE. We're really looking forward to this, according to the minutes of the June meeting. Or July meeting, I think it was. We're really looking forward to exploring ways in which we can figure out how to expand the types of assets we bought and perhaps expand the amount of assets we bought. And so the solution is print more money, print more euro, print more yen, print more dollars, and buy more assets and bring interest rates lower and lower and extend the maturities of the loan. And guess what? Debt problem solved. We don't have to worry about paying interest, and we don't have to worry about paying principal. Good luck. Let's see what you guys are saying. Carl Joseph DeMarco. Why am I here when I should be working? Well, let Lewis get away with the accent because he's Italian too. Yeah, but I do Bernie Sanders, and I'm not an old socialist, so that's just the nature of imitations. Because if the 1% got all the money and you allow Lewis just to imitate me, then Mario Draghi gets a pass. And then because he's in the ECB, maybe they don't think that he's important enough, but we're important here in the United States, and I don't know what I'm talking about because economics is something that doesn't concern me if everything is free. Okay? Nothing they do has the best interests at our hearts as Litecoin tech support. Well, that is totally true. They're doing this because probably adds more government jobs. They are criminals. The guy's a dweeb. Litecoin tech support. Well, there you have it. I want to thank everyone for joining me today, and we'll see you later in the day. And tonight is Solid Gold Sunday with Smaulgld. We'll see you then.